Well, bad news for Bitcoin and the wider cryptocurrency market, as it appears that our correlation to the equity markets remains very, very strong, and the equity markets are looking pretty gosh darn dicey right now. I'll be diving into that in today's video, taking a look at the charts, the recent price action of Bitcoin, what we could expect from inflation tomorrow, and how that may be affecting the markets, and much more. So make sure to watch the video the whole way through to get all of the goods. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that topic, you like staying up to date with what's happening in this fast-moving cryptocurrency market, then a little tap on the thumbs up button would be totally awesome. And you're totally awesome, so thank you very much for taking a quick second to do that. By the way, every single week my team and I produce Wealth Mastery. It's a cryptocurrency investor report jam-packed full of awesome knowledge, NFTs, tips, tricks, altcoin reviews, DeFi tutorials, and much, much more. You can sign up for free using the link down below in the description. Now let's go ahead and get into the charts. Ooh, some nasty candles here for Bitcoin over the last few days. I mean, look at these bad boys. Those are some nasty red candles bringing us right the heck down in price. I mean, the price of Bitcoin down since our recent highs back up here. Remember, guys, remember the 200-day moving average? Oh, so far away. Rejected massively off the 200-day moving average. Anyway, ever since then, the price has come down 18%, which kind of fits in with the kind of corrections you expect to see for Bitcoin. When it moves down, it moves down. When it moves up, it moves up. It is a dramatic coin. Now, we did lose, of course, that very important $42,500 area of support, which did not last as support for very long, unfortunately. We lost the 50-day simple moving average, the 100-day simple moving average. We did just have a bullish crossover of the 50-day simple moving average over the 100-day simple moving average. However, Bitcoin welcomed that crossover by dumping. Well done, Bitcoin. Now, very interestingly, where the price is right now. Look here, this is the trend for the price, this trend line here, going off the candle closes, so not the wicks, but the candle closes. Current price of Bitcoin coming just down to touch that line, showing that we are still in an overall uptrend here for Bitcoin. Now, if we take the wicks into account, you can see right here that we can actually see Bitcoin coming all the way back down to like $37,000. And we can still count that this is an uptrend for Bitcoin. Ideally, I would not like to see Bitcoin go any lower than $37,500. Why is that the case? Because anything lower than that, and it means that we are not putting in a new higher low. See, we've had higher lows the whole way up, right? Higher low, higher low, higher low. This could just be another higher low before we resume grinding sideways, or, you know, starting to resume a move back up here for Bitcoin. So it's not all bad, not at the moment anyway, for Bitcoin. We are finding temporary support in this area, and as I mentioned, these are two very key points that I want to see Bitcoin hold above. If we lose those levels, well, gosh darn, we could see some good price discounts anyway. I want to share this chart with you, a bit of hopium for you. This is a great chart shared by BTC Fuel over on Twitter. He says, Bitcoin is following Justin Mamus sentiment cycle perfectly. So you can see this chart here. This is the Justin Mamus sentiment cycle. So this goes all the way back to our big run up in October, November, where we got up to $69,000 per Bitcoin. So we can see the returning confidence, the enthusiasm, right? And then as we start to see the market coming down, the panic, the discouragement, now we are potentially entering into the wall of worry, coming down into our aversion phase, right? The anxiety, will we get back up above? Is this rally going to fail just like all of the others? Remember, in the disbelief phase on the Wall Street cheat sheet, there's that move up and then a move back, and nobody believes we could possibly recover. And then the market starts going crazy again, potentially lifting us off to new all-time highs, as you can see on this chart here. Is that how things are going to play out? Well, we will find out over the next few days, but it's definitely an interesting chart to take a look at, especially considering how damn closely the price of Bitcoin has followed along with this particular pattern. So I like it. Like I said, a bit of hopium for you on this otherwise grim day for the cryptocurrency markets. Of course, great market for buyers as always. And what's interesting, have a look here at the 1 year HODL wave for Bitcoin. So right now we are seeing HODLing levels at near all-time highs. Now the last time, so 64% of the total supply of Bitcoin has not moved in over a year. Crazy stuff right there. It means people have been accumulating like crazy. In fact, the accumulation has been going on for a long time now. People have been accumulating like crazy, and they're holding their Bitcoin for the long term. They're not panic selling here. They're buying more. Last time we saw the HODL wave this high was back in late 2020, where we had a similar reading of 64% just for one day there. And then, of course, we started to trend downwards. But that 64% HODL wave peak came just before we started trending up to new all-time highs for Bitcoin. Some perspective for you. We have a lot of conviction still in the market. A lot of people still holding very strong for Bitcoin. And these are the kind of HODL wave peaks that tend to come before new rallies come in. Now that wave can go higher. Obviously, the new rally doesn't have to come soon, but it does show you that there's still strong conviction in the cryptocurrency markets. Also want to share this chart with you here. This is from Nijen Tropic, who is the co-founder of Glassnode, a service that we refer to here very often on the channel because they provide incredible data for the cryptocurrency markets. He says this is Bitcoin supply and demand dynamics. HODLers accumulate at a discount, buying off panicking short-term holders. So you can see here, we have the holder net position change. So we have the HODLers continuing to accumulate. You can see that going up here. So very interesting. The price of Bitcoin going down. HODLers are buying more. Conversely, down here, we can see the short-term holders' price is going down and they are selling at a loss. And the story repeats itself as we've seen so many times before. When we see these huge dip days in the market, smart money is buying, the long-term believers are hodling, the short-termers are panicking and getting out. Just keeps repeating. One day people will learn the lesson of it, of course. Now let's get into talking about ye oldie equity markets, man. Because this is, of course, the big story of the day. This is the bad news, of course, for Bitcoin. Yeah, the price is down. The price down is just a great time to accumulate more Bitcoin. And I have been buying Bitcoin recently. As I mentioned on in the newsletter and on Twitter, I had buy orders in at $42,500. Those obviously got filled. I had buy orders in at $39,500. Those got filled as well. I'm waiting now to see if we can put in that higher low for the market, or if we're going to fail to hold that line and drop down lower before putting in more buy orders. But I will be looking, of course, to continue adding to my Bitcoin stack as long as we are trading under the 200-day still moving average. Anyway, equity markets are a mess. You're a mess, equity markets. Clean it up, man. Come on. This is our correlation right now with the key stock indexes. The S&P 500 is the blue line right here. The NASDAQ 100 is the yellow line. You can see Bitcoin, which is, of course, the index, the indicator, the crypto that moves the entire crypto market, following right along with these key stock market indexes. Bitcoin pumps here, Bitcoin falls back. I mean, it's just the correlation is absolutely unfreaking canny right now. Also, Arthur Hayes, the CEO of the infamous exchange BitMEX, wrote a great piece over here as well, just continuing to highlight the crazy correlation that we are seeing here. Now, in particular, he highlights that the correlation has been increasing. So he's going here all the way back into, more than a year ago. And you can just see as the correlation continues to grow over time. Correlation continuing to go up. This is versus Ethereum. We can see Ethereum being even more correlated over time. So we can just see this just continuing trend of increased correlation between Bitcoin, Ethereum, and key stock market indexes. Now, Arthur also, by the way, is predicting that we are going to see by the end of the second quarter of this year, sometime in June perhaps, that Bitcoin will have gone back down to $30,000, Ethereum will have gone back down to $2,500. That, of course, is his opinion. If you are looking for some discounts, well, maybe those are interesting price areas to look at. If, of course, we fail to hold, as I was mentioning on the previous chart analysis there. But why is he so concerned about the markets right now? Well, there's so much going on in the markets that's just not very awesome right now, including, of course, inflation data, which we'll get into here momentarily. But there's a lot of different factors. We have the Fed rate hikes. We have recession fears. We have the war in Ukraine. We have commodity prices going crazy. The Federal Reserve threatening to sell off mortgage-backed securities. Like, there's a lot of stuff that's providing a lot of uncertainty, a lot of fear. The sentiment in the stock markets right now is not good at all. And as we've just established, when the stock market catches a cold, well, crypto gets it right along with it, which is problematic because we have so much fear and uncertainty right now in the equity market world. And now we have the White House coming out and saying new inflation numbers for March are going to be extremely elevated. Now, if you remember, February got up to 7.9%. We've had record high inflation for a lot of different economies. The Eurozone also putting in record high inflation, but obviously the US continues to be the global economic engine. February, 7.9%. And if they're calling for extremely elevated inflation, I mean, what is that, right? Is that 8.5%? That's pretty damn high, obviously. And going from 7.9 up to 8.5, and that's just the number that, I saw a couple experts throwing around. Whether or not that's the case, we shall see, obviously, until we get the actual data on hand, which will come out tomorrow, and obviously we'll talk about when it does come out. But higher inflation numbers are not good. They continue to weigh very heavily on the equity markets. We want to see inflation starting to come back down, because the fear here is that the higher the inflation goes, the harder the Federal Reserve is going to have to act in order to bring inflation down. They're going to have to start selling off those mortgage-backed securities. They're going to have to do more aggressive rate hikes to try and bring things under control. The U.S. is almost up to double-digit inflation here, man. And if extremely elevated means something more than, for example, 8.5%, well, things could be very rough. Right now, I think this big dump that we saw today for the stock markets, for Bitcoin, for Ethereum, I think that is the market pricing in this announcement from the White House. So the White House came out, they said this, everybody freaked the frick out. Market dumped based on the idea, well, more inflation's coming. Tomorrow is going to be another painful day of inflation data coming out. But I'm looking at it and thinking, okay, well, look, if the inflation data is something like 8.5, maybe 8.6%, the market's probably going, well, we priced that in yesterday. We don't need to dump anymore. We can deal with the new reality and move on. But if it's anything over 9%, what if it's like 10% or 11%? What if inflation went absolutely freaking nuts in March, which it could have because oil prices and food prices, of course, all went absolutely insane? Then the market could be heading even lower. So we shall, of course, see what is revealed tomorrow when that new inflation data comes out. But man, lots of fear, lots of uncertainty right now in the global markets. So tread carefully out there, everybody. It is a time to be, playing the game a bit more conservatively. I keep stacking my Bitcoin. I have bought some altcoins, as I mentioned the other day, but I'm still very deep in my stablecoin stack, and it's going to stay that way until I see some real moves from the market that we're getting out of the worst of the storm, and we are in a economic and fiscal storm at the moment. Anyway, just my 2 Satoshis for the day. Let me know your thoughts on any of this stuff down below in the comment section. Thanks so much for watching today's video, and peace out till next time.